It's the 28th of October, 1929. The stock market is in complete freefall. Down on Wall Street, the New York Stock Exchange floor is in a frenzy. Traders screaming into phones in what could only be described as a wildfire of fear. But just a short distance away, it's quiet. In a dimly lit office, one man leans back calmly in his chair as he watches the collapse unfold just as he predicted. His name is Jesse Livermore. On a day where millions of Americans are on the brink of financial ruin, Jesse Livermore was watching the biggest bet of his life make him unfathomably rich. $100 million he made in 1929, the equivalent of $1.8 billion today. They called him Boy Plunger because he was one of the greatest stock market gamblers who ever lived. From a dirt-poor upbringing to becoming a Wall Street icon, his story is the stuff of financial folklore. But Livermore's life isn't just one of incredible wins, it's also a tale of devastating losses, a roller coaster of financial and personal battles in the pursuit of stock market mastery. This is Jesse Livermore, Wall Street's greatest trader. It's 1892, and a 15-year-old Jesse sneaks his way into a bucket shop, a backroom gambling parlor designed for punters who wanted to make high-risk bets on the movement of stock prices. He takes the few dollars he had in his pocket and places a bet that ultimately wins. With the taste of success, he returns time and time again, winning over and over again, and throughout the year, he turns a few dollars into a small fortune. Most of the gamblers in the bucket shop were betting no more intelligently than you might at the roulette table. A gut feeling, a strategy based on superstitions, maybe the occasional tip from the man at the bar. But Livermore was somewhat more diligent. He had a unique ability to see patterns, memorize trends, and calculate probabilities in his head. In the world of bucket shop gambling, where real stocks weren't actually being traded, he was unstoppable. Jesse was born in 1877 into a poor farming family located in Shrewsbury, Massachusetts. His father had hoped Jesse would continue the family business, working on their farmland. But a young Jesse had another obsession: numbers. He learned to read and write by 3.5 years old, and by 5 he was already reading financial newspapers, fascinated by the constant fluctuations of stock prices. At the age of 14, with just $5 in his pocket, he ran away from home. With the help of his mother, he took himself off to Boston. He got a job at a brokerage firm called Payne Weber, where he'd transcribe stock prices from the ticker tape onto a chalkboard. This was heaven for Jesse. He began memorizing how prices moved each day, particularly before big surges or collapses. He could see there were patterns in the way stock prices fluctuated, and eager to test out his theories, he stepped into his first bucket shop. Bucket shops were the wild west of stock market speculation. The unregulated joints allowed people to bet on whether a stock would rise or fall, usually with a fraction of the stake required on Wall Street. His first bet was on Burlington stock, and when it rose as predicted, he made a modest $3.12 profit. Jesse reinvested his winnings over and over again, and within a year he'd accrued about $1,000. Unfortunately, his unusual success rate didn't go unnoticed by bucket shop owners, and eventually he was blacklisted from various places. By the time Jesse was 20 years old, he'd made about $10,000, the equivalent of $380,000 in today's money. And more important than the money he'd made, over the course of many bets, he'd found what he thought was an ironclad strategy for winning in the stock market. But bucket shops were like the minor leagues to Livermore, and as he grew into a young adult, he had his eyes on the majors, Wall Street. It was time for him to play alongside the professionals, so Livermore took his trading principles all the way to the New York Stock Exchange. And he lost everything. within months. While the bucket shops allowed betting on stock prices, it wasn't the stock market. There weren't any trades actually being made. Wall Street was a completely different beast. Stocks didn't move as predictably, and he learned the hard way that there were other factors and forces that drove the markets. But Jesse Livermore wasn't a quitter. He had built a fortune from nothing once before. Why couldn't he do it again? It's October 1907, and Wall Street is in chaos. A man named Otto Heinz has been attempting to corner the copper market by borrowing heavily and buying as much United Copper stock as he could. The plan was to control the copper industry and then raise prices. If that sounds illegal, well, it would be in today's market thanks to antitrust regulations. But this is 1907, and when Otto's attempt failed, he caused the bankruptcy of several brokerage firms who had lent him money, ultimately triggering a run on the banks. One of these was the Knickerbocker Trust, one of the largest banks in New York. It collapsed overnight, setting off a chain reaction of bank runs and business failures. From peak to trough, the Dow Jones Index fell about 50%, with much of the decline occurring over a few weeks. But while the American economy cratered, Jesse Livermore was making millions. He'd built his wealth back up to a few $100,000, largely from a bet made a year earlier. He took a short position against Union Pacific Railway, betting that it would decline in value. And not long after, San Francisco experienced a devastating earthquake. It sent Union Pacific stock crashing down, making Livermore $250,000. The earthquake was also the start of a financial chain reaction that continued into 1907. Livermore correctly predicted that the snowball of failing banks and businesses would continue, so he took large short positions against the entire market. With the stock market in freefall, every drop put more money in his pocket. And when the dust settled, he'd turned a few $100,000 into $3 million, about $100 million in today's money. While this was an undeniable success, he certainly wasn't viewed as any kind of hero. The panic of 1907 crash saw everyday people losing their life savings. There was no federal insurance on bank deposits at the time, so if your bank failed, you lost whatever you held there. Short sellers like Livermore, betting on the decline of stocks, were seen as vultures, profiting from other people's misery. Everybody took notice, including the most powerful man in finance, J.P. Morgan. Morgan was one of a few ultra-wealthy Americans who stepped in to help rescue the economy. He organized a massive bailout to stop the panic, seeking funding from the likes of John Rockefeller and the wealthiest woman in America, Hetty Green, who, by the way, is another fascinating character of the time that I covered in a previous video. Morgan also needed the support of traders like Livermore, who had huge short positions against stocks. The problem was that even with a cash injection from wealthy individuals, there was still no demand for buying stocks, and short sellers was the one place it could come from. When you bet that a stock will go down, you do so by borrowing the shares from a broker and selling them on the stock market. If the stock then declines in price, you can rebuy the stock at a lower price and return the shares to the lender. So if Morgan could convince large short sellers to close their positions, it would create a surge of demand for buying stocks. Morgan contacted Livermore and asked him to stop short selling. He was one of a handful of traders who had the power to cripple the stock market and make millions more. But he listened. He began buying back the shares he was betting against and closed his short positions. On that day alone, he made $1 million. Had he continued, he would have made 10 to 20 million. With the help of Morgan's bailout and Livermore's restraint, the market eventually stabilized, and the events of this crash would ultimately lead to the creation of the Federal Reserve banking system a few years later. But Jesse wasn't just about to sit around on his wealth. He was a trader at heart, and in true Livermore fashion, he would soon make and lose millions more. It's 1915, just 8 years after Jesse made millions in the panic of 1907, and he is once again completely bankrupt. Wandering the cold, dark streets of New York, his eyes are drawn to a discarded newspaper. It details the war fronts raging all across Europe. He frantically flips to the finance section to see that the stock market had been rising again. But Jesse could see something that nobody else could. A once-in-a-lifetime opportunity to make his fortune back. Boom, bust, repeat. That could have been the phrase engraved on Jesse Livermore's tombstone. After making millions in 1907, Livermore lived lavishly. He bought yachts and cars, houses and jewelry for his wife, spending money like it would never run out. Unfortunately, it did run out. In 1908, just a few months after the crash, he experienced startling losses trading cotton prices on the commodities market. He was supposedly tricked by a friend, Teddy Price, into buying more and more cotton. But what Price didn't tell him was that he was using him to offload his own cotton position. By 1915, Livermore had to declare bankruptcy, claiming that he had debts of $102,000 that he couldn't pay. Debts he'd accrued through stock transactions in 1913 and 1914. With no money, connections, and few remaining friends, most traders would have given up on Wall Street by now. But Jesse Livermore wasn't most traders. As war raged across Europe, Jesse began building his wealth again. Despite an initial decline in stock prices at the onset of World War I, the market was booming. Global conflicts bring uncertainty that make markets more volatile, but they also bring huge spending by governments which fuel businesses and drive stock prices higher. Companies producing steel, ammunition, and wartime supplies benefited the most, and Livermore borrowed heavily to invest in them. By 1917, as the war approached an end, he was able to make millions by switching his strategy. He reasoned that peace talks would send industrial stocks down and cotton prices higher, so he once again loaded up on cotton and bet against stocks. It turned out that his theory was about half correct. He made a killing as industrial stocks fell, but cotton also suffered. It was reported he was betting long on 40,000 bales of cotton, which according to the New York Times fell $25 a barrel in a single day, a loss of $1 million. But all in all, it was estimated that after the trades, he was still worth a few $1 million. The repeated victories and subsequent crushing defeats were the nature of both his Wall Street career and his personal life. Throughout these years, he went through multiple marriages, affairs, divorces, and other public scandals. He continued making millions through the 1920s as the stock market boomed. What Livermore didn't know at the time was that everything in his life up until now had been child's play when compared to what was about to happen. Wall Street, and the world for that matter, were about to experience the greatest financial disaster in history, and Livermore would be at the center of it. Jesse leans back in his chair and closes his eyes for a moment. The room is quiet, except for the sound of chalk grazing the great green chalkboard on his office wall. His crew of 6 chalk boys work in silence, listening with headphones to stock price changes being reported through his radio. For hours, he watches the panic unfold, the market falling 12% on what would become known as Black Tuesday. Billions of dollars of wealth wiped out. The Roaring Twenties were coming to a violent, catastrophic end. But Jesse had predicted it all. The first half of 1929 was the pinnacle of stock market speculation and euphoria. Everyone from mechanics, housewives, and shoe shiners were getting rich buying stocks, and many were amplifying their returns by using leverage. The hot technology stocks at the time were radio companies, but even boring staple companies were trading at prices of 30 to 60 times their annual profits, far above the normal level of 8 to 12 times earnings. Livermore watched the wild speculation throughout 1929 and decided once again to open large short positions. He lost money on a few trades as prices surged higher throughout the year, but eventually the party came to an end. When trading opened on Monday the 28th of October, wealthy individuals and institutions started selling huge blocks of stock. The stock prices of big companies like General Electric and Standard Oil were collapsing in spectacular fashion. AT&T, which had peaked at $310 a share, had slid all the way to $204, and one of those high-flying radio companies, RCA, had fallen from $110 to just $26 a share. $15 billion of value was wiped out in a matter of hours, and a near $90 billion wiped out since the start of the month. The next day, the disaster continued. The Dow Jones Index fell another 12%, or a more than 23% decline over 2 days. Jesse made $100 million that year, the equivalent of $1.8 billion today. To Wall Street traders, Livermore was a legend. He had done the impossible, predicting and profiting from the greatest financial collapse in history. But to everyone else, he was once again the villain. The historic market collapse marked the beginning of the Great Depression. The economy was ravished for years, millions of Americans sent into complete poverty, all while Jesse Livermore was richer than ever before. But of course, it wouldn't last. I wish I could say there was a happy ending to this story, that he had died a success of the game he'd been playing his entire life. But that's not what happened. Livermore couldn't resist the urge to keep trading. He made reckless bets throughout the early 1930s as he tried to outdo his greatest trades. By 1934, he was once again bankrupt, with $185,000 in assets and more than $2 million in debts. In 1935, his son, Jesse Livermore Jr., was shot by his own mother during a drunken argument in their suburban home. Fortunately, he survived, but the culmination of multiple divorces, lawsuits, and bankruptcies was becoming an unbearable toll on his mental health. On November 28, 1940, at the age of 63, Jesse Livermore took his own life at the Sherry Netherland Hotel in Manhattan. For all his brilliance, the fortunes made and lost, Jesse Livermore's life could only be described as a tragedy. His book, How to Trade in Stocks, remains a classic to this day, and he will forever be known as one of the greatest figures in Wall Street history. Subscribe if you enjoyed, and if you're looking for something else to watch, here's a couple of videos I think you'll like.